Welcome back to the Malaysia Money Matters show. It's the 24th of April, 2025.
Great to be here.
Today, we're diving into a snapshot of the Malaysian financial scene, looking at some company news, global stuff, how it all connects.
Yeah, sorting through the headlines to see what really matters. Let's think of it as your briefing.
Exactly. So let's kick off with Malaysian companies. First up, Bank Rakyat. They've launched something called eGold Account I.
Ah, yes, the Shariah-compliant digital gold platform.
Right. Accessible through their internet banking. And you can start investing with just RM10.
That's pretty low entry, isn't it? Makes gold accessible.
It really does. It's 999.9 quality gold, LBMA accredited, and you can trade it in real time.
And the physical conversion option is interesting, too. From digital to actual gold bars deliver.
Yeah, from half a gram up to 100 grams.
Yeah.
And this comes just as gold prices have been, soaring.
Hitting record highs, yeah. Over U.S., $3,500 an ounce. Classic safe haven demand with all the global uncertainty.
So this Bank Rakyat platform, it taps right into that, offering a Shariah-compliant way in.
Definitely. For you listening, it's an interesting option, especially if you're looking for Shariah investments. But, remember, gold can be volatile.
Good point. It's a safe haven, but prices do move. Okay, next up, Ferrotec Holdings, the Japanese company.
Right. They're putting another RM1 billion into Kita, building a second facility in Kulim.
A big one, too. Nearly 1 million square feet.
Wow. And focused on advanced materials, components, semiconductors, automotive, that sort of thing.
Yeah, supplying Asia, Europe, the Americas. They expect it done within a year.
That's fast. And they're bringing in, over 700 CNC machines?
Over 700, yeah. Plus creating over 1,000 jobs.
So with their first plant, their total investment is now RM 1.9 billion.
That's right. It's a pretty strong signal, isn't it? Confidence in Malaysia's semiconductor ecosystem.
Absolutely. Attracting that kind of high-tech foreign investment is definitely a positive sign for the economy. Jobs, tech transfer.
Okay, let's move on to contracts. MCE Holdings has landed some new deals, totaling about RM 120.67 million.
Okay, decent sum. What's in the mix?
Well, the biggest chunk is RM 69.59 million, a 5-year deal with JVIS USA out of Michigan.
Supplying mechatronics components for a U.S. car model.
Yep, starting first quarter FY 2027. And domestically, their unit multi-code electronics got Perodua contracts.
Ah, Perodua, worth about RM 41.33 million.
Exactly, for electronic and mechatronic parts for an upcoming EV, and also an internal combustion engine model.
So covering both bases there, traditional and electric.
Right, and then there's MCE Hengtuo, their 60% owned subsidiary. They bagged a Proton contract.
Okay, how much for that one?
Around RM 9.75 million, also 60 months. For mechanical and mechatronic parts for a new Proton model, starting early 2026.
Interesting. So MCE is supplying both local giants and exporting to the U.S.
And this all comes just ahead of those potential U.S. tariffs on auto parts we've been hearing about.
The timing. Securing that U.S. contract before tariffs hit could be strategic, maybe locking in business. It shows they're competitive, though, EV parts included.
Good point. Diversification seems key. All right, switching to energy, MN Holdings.
Right, they're involved in solar projects.
They've been appointed by Sunview Group to supply interconnection facilities for 2 solar plants in Sungai Petani, Kita.
Interconnection. So basically hooking the solar farms up to the grid.
Exactly. Establishing new facilities, extending bays at an existing transmission intake. It's worth about RM 29.7 million total.
And the timeline.
10 months. Each plant is just under 30 megawatts AC capacity.
Okay. And didn't they have a similar contract before?
Yeah, a smaller one, RM 5.2 million for a plant in Kuala Lumpur. So they seem to be carving out a niche here in Malaysia's green energy push.
Definitely playing a crucial role in that transition. Essential infrastructure work.
And separately, but still in energy, Petronas signed 11 MOUs.
Memoranda of Understanding. So agreements of intent.
Right. Aimed at strengthening the local oil and gas services and equipment sector. Things like yard transformation, productivity, skills development.
So adapting the existing O&G infrastructure and workforce for the future makes sense. It's about staying competitive.
Okay, let's shift gears now. International news. Big tech in the EU's crosshairs.
Ah, the Digital Markets Act fines. Apple and Meta got hit.
Yep, first sanctions under the DMA. Apple fined 500 million, Meta 200 million.
Ouch. For non-compliance, right?
Yeah.
The EU wants to curb their market power.
That's the idea. Allow smaller rivals a chance. This came after a year-long investigation.
And Apple and Meta are fighting it.
Oh, yeah. Apple says it's unfair, bad for users. Meta says it handicaps U.S. firms while giving others, like Chinese companies, different standards, basically calling it a tariff.
Strong words. And Google and X, formerly Twitter, might be next.
They're also facing potential EU fines, yes.
Yeah.
And interestingly, this comes as a U.S. court just ruled Google illegally dominates parts of the online ad tech market.
Wow. So pressure on both sides of the Atlantic. The EU being proactive with the DMA, the U.S. potentially breaking up Google's ad business.
It's a major regulatory pushback.
It really is. For you, the user, this could eventually mean more choices, maybe different ways these platforms operate as they adapt. It's a space to watch.
Definitely. Now, commodity markets. Copper prices have been ticking up.
Yeah, around US $9,450 a ton in London. What's driving that?
Seems linked to a signal from the U.S. about maybe softening the stance towards China on trade.
Oh, interesting. Like the U.S. Treasury Secretary suggesting a tariff standoff isn't sustainable.
Exactly. And President Trump indicating he plans to be very nice in trade talks with Beijing. That easing of tension seems to be boosting risk appetite.
Right. Risk on sentiment. Plus, Trump backing off threats against the Fed share probably helps calm nerves, too.
Seems so. And also on commodities, India started buying more palm oil again.
After a pause. Why now?
Prices corrected, making it cheaper than soy oil. So refiners are stocking up.
Good news for Malaysian palm oil futures then, potentially. India's the world's biggest buyer.
Could provide some support, yeah. Okay, let's touch on political news quickly. Malaysia-China relations.
The MOUs signed during President Xi's visit.
Yes. The cabinet decided the foreign ministry will coordinate implementing all 31 of them. PM Anwar wants them executed quickly.
31 MOUs covers a lot of ground. Any highlights?
A key one is the proposed Twin Hub initiative, linking KLIA with an airport in Henan, China.
Aiming for an Asian-China Air Silk Road. Sounds ambitious.
Transport Minister Anthony Loke emphasized strengthening aviation ties, boosting regional air logistics capacity. They're setting up working groups, a forum.
So a clear push to deepen economic ties, especially in logistics and trade facilitation with China, could mean smoother trade flows if it works out.
All right, finally, let's look at some broader economic indicators. Malaysian inflation.
It's decelerated. The March CPI was up 1.4% year-on-year.
Which is the slowest pace since February 2021, a 4-year low.
Mostly due to easing price gains in restaurants, non-food items.
So what does this mean for interest rates?
Yeah.
Bank Negara likely to hold steady for now?
Yeah, probably patient for now. But some economists see potential room for rate cuts later this year, to support growth, especially with inflation easing and potential trade headwinds.
But the IMF seems a bit less optimistic on growth.
They did trim the 2025 real GDP forecast for Malaysia, down to 4.1% from 4.7% previously.
Why the cut?
Aligning with reduced regional outlooks, citing the shifting global trade landscape, uncertainty from U.S. tariffs, that sort of thing.
And globally, the IMF sees those tariff pressures pushing public debt up.
Yeah, potentially above pandemic levels, near 100% of global GDP by the decade's end. Slower growth, trade strains. It puts pressure on government budgets.
Yet they still advise countries to prioritize debt reduction.
Yes, to build fiscal buffers for future shocks. It's a tough balancing act.
Okay, so quite a bit going on. We've covered Malaysian companies like Bank Rakyat's Gold Platform, Ferrotec's big investment, MCE's contracts.
Women holdings in solar, Patronus's MOUs, the EU tech fines, commodity moves.
The Malaysia-China MOUs coordination, and the latest on inflation and growth forecasts.
It's definitely a dynamic picture, lots of intersecting forces.
So wrapping up, what stands out as maybe the most exciting or impactful news today?
That's tough. The Bank Rakyat Gold Platform is interesting for individual investors. The Ferrotec investment is significant for Malaysia's tech sector.
For me, I think it's got to be the potential shift, however slight, in the U.S.-China trade narrative.
The comments suggesting a possible easing of tensions.
Yeah. Bessent's remarks, Trump's indication of being very nice. If that leads to actual de-escalation, the ripple effects could be huge, especially for a trade-dependent economy like Malaysia's.
That's true. Any reduction in those tariffs or tensions would be a major global development. And with the Malaysian trade delegation heading to the U.S. soon.
Exactly. That meeting with the U.S. trade representative becomes even more significant. It's definitely the story I'll be watching most closely. Could really shape the next few months.
Agreed. A key one to keep an eye on.
Well, that's our brief look at some key financial news today. Remember, if you want more in-depth analysis like this,
you should subscribe to the Malaysia Money Matters podcast.
We'll keep unpacking these developments, giving you the insights you need. Thanks for joining us.
Until next time.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.